Hello everyone, welcome to the weekly review. We just closed the quarter. We'll look at more macro-oriented review this week. But before that, let's look at what happened. And turning on the Q3 range, the updated one, it was, I don't know, somewhere around here last week. Something here, the lows were here, and now the lows are here. The Q3 mid and Q3 open are now very close to each other. And expectation was that we would drop into this area here, this gap, overshoot below the Q2 mid a bit, and then bounce. This is what we got. And before this week, my expectation was something along these lines, in which, and I'll turn this on as well, in which we go and retest the highs by year end. But this week is looking a lot more scary than was a lot more scary than I thought. And now I think there are two scenarios. One is this one. You can ignore this part. I'll redraw it to ignore that. So we had this. This was supposed to be time accurate. We go up, maybe something like this. This would be more accurate. Okay, but this week I see a lot of concerns about growth. EU economic numbers are scary as fuck. Economic data, not economic number. Anyway, uh, I talked about Nike earnings to keep an eye on it, and the reaction for Nike earnings was bullish. It got kind of rejected because the whole day turned red in the second half, but it's still like a 6.68 move, which is a good thing for Nike. But their US numbers were shit. They were down year over year in US revenue. This in the context in which the GDP growth is supposedly 4.9 according to the Atlanta Fed. So how the fuck does Nike post negative year-over-year growth in revenue with Q3 GDP at 4.9? On top of it, the Costco thing about getting very low inflation in Q4, like between 1 and 2%, that is very bad for stocks. That's borderline deflation, if not outright deflation, as similar to what is in Europe. There are many signs that the US consumer is kind of rolling over, and this is concerning. So, this puts us in a situation in which the rally might end a lot sooner than we think. And James keeps saying some stuff like flows will take over and we are in a positive environment and flows will take us to the highs or maybe even higher by year end. But he also keeps saying at some point macro will take over and then hold on to your hat. I think we are very close to the point where macro will take over, and even in spite of flows being bullish into year end, we have a potential for a major sell-off in November. And then now I'm leaning more towards this kind of scenario. So we have, actually, let me redraw it. This is an Elliott wave sequence. We are we have done wave one, wave two here, pull back up to here, let's say, and then we start another leg down for which the target is 410, 411, something like this. The reason for this target I will show a bit later when I will detail it. But what what we should be keeping our eyes on is a sort of anemic bulls. Uh, in the very short term, I kind of expect that we go up, like this part here is more or less similar in both scenarios. But if we even fail to reach this trend line and start going down again, this would be a sign of anemic bulls. And if they cannot push it higher, the bears will take over and give us this pullback here. The good part about this is that bonds will be going down. This is toppy behavior. Maybe we get another push next week to retest 5, but I don't expect we will go higher than this, and yields will collapse because bonds go higher. Maybe even shorter bonds start dropping because of fear of recession. The US consumer, I think, is very close to tapping out, and don't think Q4 will be all that bullish. But more or less, we will find out probably at 440 in this area here. If we do not take back the Q3 open, I think it's going to be very ugly. Secondly, let's look at the quarter here. I'll hide everything. This is a reversal candle. It can still go higher from here, and it's going to be the last move up, but more like this. Another 3 months of going up and then maybe go down. But this is not what I wanted to show. Like the Q4 open is likely going to be exactly where we are here. Imagine we go up maybe to 440, let's say, because this is now a level where the body of the candle starts, and then we reverse down. If we lose the quarterly open, which will be, let's say 427, just for the sake of the argument, we don't know, but we'll know it on Monday. That's a very, very concerning move. And then the target is probably the body of this candle like 408, maybe the wick of the candle like 403. We'll see when we get there. The point is a move up above the quarterly open, then a rejection at 443, and then a retest of the quarterly open that fails to hold is extremely, extremely bearish. Like I said, I think we can see the orange line scenario to basically make a full Elliott wave free wave sequence to its finality. Okay, let's hide this, not this, the other one. Let's hide the other one, and I'll hide this as well, and I'll show why that is my target. Okay, I think I can hide the Q2 range as well. Okay, AVWAPs. I'll show some AVWAPs. This is the February high. This is exactly where we bounce here. This is the March low, and this is where we retrace. We haven't closed below this level. So even though we went to the February high, we're basically this range between these two AVWAPs. The last high before this one and the last low before this one is where we bounced, and this is very good. But yearly AVWAP is a bit lower, and the 8-day all-time high AVWAP is 414. Aside from this, if I put on the visible range profile, we can see that the volume pivot point is 410.73, very close to this all-time high AVWAP as well. If we look from the all-time high, what do we see? It's still 411. So ever since the all-time high, the pivot point has been here. So this is where I think, because of the all-time high AVWAP and the volume point of control from VRP, 411.29, I think this is where we will bounce in the next leg down. Obviously not an exact science, but the approximate area between 410 and 415 is where we should be seeing. But if this happens, everything has a bearish bias. Like this won't get more bullish as we go into the new year. Yes, we will have most likely a move higher, but then start another free wave sequence down, something like this. Okay. This being said, this is now my main my main scenario. Oops, didn't want to do that. This is now my main scenario, but take it with a grain of salt as well. We have to evaluate things as we go because it's a very uncertain period of time in which there is nuance. So if uh, if we get to 440 and see weakness, then it becomes more or less it increases the chance that this will happen. Because like I said, in both scenarios, we're supposed to go to this 440 area. If we do not make it to 440, it's another sign in the favor of another leg down. We can also apply some other stuff like Fibonacci and see where we should be, where this can go. Like for example, 50%, 440. So this says the Q3 mid is the target and we should get to 440 but not get above it. If it is 436, then it will be extremely bearish. Like if we only get to 436 and then start rolling over like a 61.8 retracement, again, it's another bearish sign and not a good one for the bulls. We shall see. Keep your mind open about this and watch levels. Okay. Now, why it's complicated is because from my point of view, there's a clear divergence between mega caps and value bit down names. Let's say. Uh, and when I look at stuff like Tesla, it doesn't look that bullish. Uh, Even yesterday, like this is more or less a rejection. Um, Need to draw some stuff to see it. But a lot of once you look at charts as much as I do, you you get like an instinctual reaction to stuff. Like I look at this doesn't say bullish to me. Long-term trend line. So let's say we are bullish. If we are bullish, what has to happen? Well, we have to go higher and break out above this. But bounce here again, and we go for this. But this is a major trend line. Like, what are the odds Tesla breaks out here? If Tesla were to break out here, it would be another monster one. Like, it wouldn't be just it goes a bit higher and then reverses. That's uber bearish as well because we're in this range, and then we need to retest the lows of the range. If this is a true breakout, it would have to be like colossal. Like for the breakout to work out here, it would do something like this, back to the all-time highs basically. This is a breakout. This is the level of breakout we're talking about if Tesla were to break out here. Given our macro environment and the current setup, is that even possible? Most likely not. Like I see it like a 1% chance for this to happen. So if it doesn't go up, it can only go down. Sideways, major consolidation, but then we lose this trend line. Again, because this is a what's between January 2023 and today, almost 9 months of consolidation. Actually, 9 months of consolidation because we just ended September. let's say it takes another 2 weeks to do this. The only way is down. There is no fucking way this breaks out to the upside unless it's a fake breakout. It does this and then it still breaks down. As soon as this trend line is broken, this one, all hell would break loose. In the same way that I say that if it was to break out to the upside, it would go up a lot. If it breaks down to the downside below this trend line, all hell will break loose. Like most likely target is 153 here. And that's $100 worth of breakdown. Like how much is that? 40%. 30%, 40% drop here. And it's just a matter of time until we have this breakdown because mm, there is no growth prospects. Apple Apple made new lows. It backtested the lows here. So what's what's happening? Okay, backtested the lows. Again, don't think it breaks above quite yet. Retests this, and then it goes up. But then it goes up and it gets to this point here, like 178, 180. Will it break through? Probably not. I would say more likely not than yes. Two waves, and then we get the third wave. This aligns perfectly with SPY with the down scenario, more or less. Something like this. Yeah, this is a good area to hold. This one. So it would have to go down even more to get to a clear, nice support. Down to here, some consolidation, and then it starts another leg up. Nvidia. Nvidia broke this level. Uh, Now it went back into the channel, and semis have been showing relative strength all this week. But now imagine it goes back below this trend line. Again, it's the beginning of another major leg down, and I don't think it will stop below for 313 if it were to happen. At the same time, sorry, if it continues going up, it will 100% not make a new high. The expectation would be something like this. This will stop it with a lot of certainty. And when this gets stopped, it will retest this a second time. The next time it breaks below this level, the trendline level, it will not easily stop. Maybe it doesn't go as low as this, but the retest of 375 is almost assured. Google Google sort of looks like the market in that. Let me go back to SPY and show it. See this deviation below it. Backtest once, backtest twice, and not even make it there. Flush. Back to Google. Deviation. Backtest once, maybe backtest twice, and then it will just go. And for Google specifically, Google is the one of the names most aggressively being sold in the dark pool. And it's been like this for weeks. It's actually gotten worse this week, but Google is with hand in hand with RTX. And you guys saw what happened with RTX. And people have been trying to catch the knife, but RTX is just keeps dropping. This Okay, this didn't pan out. We start another leg down, and because this didn't pan out, we are targeting to double up this range. So the support for RTX is either 59 in a best case scenario or 51 in a worst case scenario. I don't think it will stop here. This is just a temporary stop, but it should continue down afterwards. And RTX is being sold by the dark pool a lot, and Google is being sold by the dark pool a lot. How does this end well? And going back to Google, actually I'll do it on GeoGL. So deviation, back in, try to get back above, backtest, maybe it goes down a bit, backtest again, and then it will dump like there's no tomorrow. This is the fate of Google. Again, I'll show SPY, deviation, backtest, another attempt, flush down. This will be Google in a couple of weeks. Then Amazon, because Amazon corrected more than usual, it's actually one of the more bullish names. And I would expect, I don't know, retest of 147. We shall see. But again, same fate. This kind of looks like Apple. It needs another push down that maybe it's being done on relative strength, and then it should go like this, and then eventually like this. Microsoft kind of the same thing. So we lost the major trend line, and we did a bit of a flush. Now maybe this, maybe it goes all the way up here for a backtest of the trend line it lost, and then it can only go down. Meta, still no breakdown on the horizontal level, but making higher lows. Again, how can this break out and go higher? I don't get it. Like we are not at the lows where uh, I was bearish and thought it could go even lower. It's the same kind of scenario here. Like why the mistake was believing it would go lower or retest the lows. The mistake in this scenario is thinking it can go higher and retest the highs. I think it's very similar to the moment here, and I'll invert it. Does this part here look like this part here? And the answer is yes. What comes next? This part. And if earnings are bad, then this part. They look eerily similar as well. uh, Netflix broke the long-term trend line. It is due a backtest. Maybe we get a positive reaction for because of the maybe the actors strike ends. Maybe it even does this, but it lost the long-term trend line. It has to go lower to get buyers. It's not low enough to get buyers. So this is mega caps. XOM, this hasn't changed. Uh, how low it goes before the final push up, I don't know, but I still believe in this blow off top kind of move, and then it will collapse because slowing economy plus consumer tapped out equals oil will go to shit. And the more explosive the blow off top is for oil, the bigger the drop when it does happen. And I will exemplify this through 2018. Like, look at this blow off top, look at this pullback afterwards. When oil does these crazy moves outside of acceptable norms, it always mean reverts. So now the good scenario for oil is basically going sideways, consolidating in this 95-65 range, something akin to, what is it? to this. So my bad, to this. So after the period between 2011 and 2014, it basically went sideways between 114 and 73, relatively similar range, which it was just $10 higher. And it was a period of stability. Oil needs stability. So if we take how similar was it? 114 to here. If we put it on hour, it was a bit bigger as a range. But for oil, the good thing is stability. If oil breaks out here, it basically guarantees a crash later on. Like if it would retest the highs, if it would break out and go here, let's say, then it will do this. And we actually have proof of this quite recently. Divergent second top, crash. This will happen again. This will be a double top. It won't be, and like people believing oil will go to 150 and stuff like that at the moment, in the context of slowing growth, are just delusional. Okay, so that was mega caps. On the other hand, on the other hand, we have names like what? Let me do other requests and we'll find different names. So AA, complete dumpster. Uh, but this is 2 lines, 2 pixels thick. And bullish divergence. Apple, no. Airbnb, no. Archer Aviation, no. Alba Marble, Alba Marle, my bad. Uh, Again, dumpstered near the lows. AMC don't care. AMD don't really care. Chinese stuff, which has been dumpstered quite a lot and is still near the lows. Uh, that look okay. Banks look okay. Like even City. Divergent visible with the naked eye. Actually, let's do this. Banks, Schwab near the lows. XLF, Bank of America near the lows and a long-term demand zone. Maybe it goes a bit lower. City, I already mentioned. Pre, retesting the lows. Then we have China, like I said. Solars near the lows. JKS is a solar. Neo retesting the lows here. PDD was at the highs. Weibo near the lows and in a long-term demand zone. Where's Baidu? Baidu, decentish, but still not near highs at all. There were a couple of others. Let's look at steel. CLF had the nice breakout move, but empty near the lows. Nui is fine. Schnitzer still near the lows of the range and bullish divergence as well. So basically, all the value names are in the shitter already. Uh, Only tech names are high, and especially mega caps are super high relative to where they should be. So there's this strange divergence between mega caps and the rest of the market, which looks decently well, like UPS as well, like Divergence here maybe recaptures this. But a lot of names that have been beaten down, RH almost near the lows as well. Like this, this is extremely strange. And the market has to choose between, are these names low enough for us to buy, or is tech still a buy here? So there are three scenarios. One, these names are not good enough to buy, but mega caps are still a sell. If these names are not bought up and mega caps continue dropping because they should, then the whole market drops. This was basically the end of the bull market in 2021. The market started dropping when mega caps rolled over. Then the second scenario is fuck mega caps, but these names are good enough to buy. In which case, we will see outperformance in DIA and IWM, underperformance in QQQ, and this is the healthy outcome for the market. If we were to get this outcome, I would be quite happy and believe in a long-term bull market. And the third one is these names are still not good enough to buy, or they're only marginally good to buy. We just buy them out of momentum because the market is going up. And people go back into mega caps and pile onto mega caps like they did in 2021. Mega caps do like a blow off move relative to where they are now. Like imagine Tesla going to, I don't know, 300. Tesla at 300 will mark the end of the bull market. Apple back to, I don't know, 190. Nvidia back to old makes new high because Nvidia is the most spectacular name. Nvidia 500, Tesla 300, Nvidia 500, Google I have no idea 150, Amazon 150. Those will be the headlines, the prices at the top of the bull market, and then we will start a horrid bear market episode that will probably last another year, and this will happen probably in November, December. We'll see. But the only healthy option is the beaten down names which have priced in the recession should be getting bought up, and mega caps who have been outperforming should be underperforming because people take money from mega caps, reinvest them in the beaten down names, then that means they believe in the bull market because they're reinvesting their money, and the market should still continue going up in spite of bad economic data that we may be getting in the future. And this is how higher for longer develops without, I don't know, a market crash or something like that. If this would happen, the yields can stay higher, economy slash market keeps going on in a bullish manner, but other than that, the market will either blow off top in mega caps and then crash, uh, crash, quote unquote crash, not necessarily crash, more like major correction. uh, uh, or it can choose the path of no violence, buy up the beaten down names, and get out of mega caps basically. So this is my take longer term, and I'm not optimistic that the beaten down names will get bought up, and I still think the mega caps will outperform for a short while, but I like to be optimistic, and we'll see when we get to 440. Until 440, everything should bounce, and we'll see when we get there. That's kind of the whole setup here. Last mention is for yields. I think this was the tick up, the bottom tick for TLT or the top tick for 20-year yields, uh, and I think it was 5% exactly, 5.008%. So next week, if we continue going down for a day or two, I would think this gets retested, and that will be the top of the cycle. and then it will be all downhill. As the market corrects, yield to start going down. Uh, if CPI keeps dropping, which I think will happen, uh, the Fed will start backing down slowly, but they're about to do another major mistake. This has the same vibe as transitory inflation had in 2021. The higher for longer right now, when growth is starting to roll over, is uh, is quite scary. But we will see. This had a more rambly kind of was a more rambly kind of video. Hope you guys enjoyed it as well. Next week we go back to normal. Okay, that's a wrap. Have a good one. Bye bye.